people sometimes think that they don't want their credit checked. Why? Because they feel and they've heard that it can damage their credit.
Right, I hear that a lot.
The reality is it's actually quite healthy to check your credit from time to time,
right,
so that you know that you're in good standing. So they want to buy in 6 months, a year, check your credit.
Hold up. So welcome everyone. I am with probably the best looking, most senior, most high producing mortgage agent at Mortgage Pal, someone who I usually try to shadow as much as possible when I'm in Vancouver or in Ontario. This is Mckay Wood.
Yes, good to be here.
Right, you're on the show.
I appreciate all the accolades, although I think if everyone's gullible, they'll believe you.
Well, I might as well pipe you up, and then based off how you answer today's questions, I think the viewers will decide for themselves if if you were the top producer in your rookie year, which I think is still a thing. They can't take that. They can't take that away from you, can they?
Yeah, but I'm getting a little old now. That was a while ago.
How long ago was that? 5
years when I started. 5 years.
5 years. Well, so 5 years in the business, and when you look at that, we are at 2010. We're at 2010 now, plus 10 years, so 2020. And there's a lot of people that live in Vancouver, in Toronto, other parts of Canada, and I think they're probably thinking a few years in advance and starting to just realize maybe I will buy a house one day. And when I'm at the finish line or getting ready for it, there's probably some things that I need to be mindful about. And being in the business 5 years and you having as many cases as you have had, you've probably had people at the finish line who wish they would have been able to hear your wise advice far before they're actually buying a house, putting an offer down, getting a mortgage. What are those things that most people forget to do when they're preparing for a mortgage, even 6 months before, let's say?
Yeah, it's a bit of a challenge when you suddenly go to process a mortgage.
Yes.
And suddenly we've got some issues. Doesn't work. So I think there's a few steps that people need to consider before they buy a property. Okay. Because we did some prep on this.
Of course we did.
A little bit.
Yeah.
Step number one, credit. Crucial piece of information.
Right.
People sometimes think that they don't want their credit checked. Why? Because they feel and they've heard that it can damage their credit.
Right. I hear that a lot.
The reality is it's actually quite healthy to check your credit from time to time,
right,
so that you know that you're in good standing. So they want to buy in 6 months, a year, check your credit.
Got it.
Have it checked.
So there's Equifax lets you do it, TransUnion. I've tried a few times and it's not the most intuitive. Borrowwell, Credit Karma are the more tech savvy, easier interfaces, maybe not as accurate, or are they pretty accurate? Like, can they just go and Borrowwell, Credit Karma, or do you recommend to do it directly on Equifax?
People say, oh yeah, I checked it on Borrowwell. It's this number. But then when I check it, it's a different number.
Right.
So typically the credit websites out there, they use what's called a credit score.
Right.
And sometimes it's an amalgamation of different factors.
Right.
And so it doesn't actually give you the beacon score, which is what mortgage brokers use when you're qualifying for a mortgage.
Interesting. Beacon score and credit score, they're different?
Consumers will never have a beacon score.
Right.
Because there's actually, I think, 4 different scores that are produced.
Right.
And credit facilities like Equifax and TransUnion are very specific. But Borrowwell, Credit Karma, the other websites, they take an algorithm or a grouping and then produce, oh, here's your credit score. It's a generic score that will allow you to look and see and feel like you're in a good place. So at the end of the day, credit is crucial, and the general rule is, I just spoke with someone today. She was 25 years old. She had a pretty intuitive father who prepped her well.
That's good.
She had 2 credit cards. She'd had them for 5 years each.
Cool. Built some credit history.
Reporting. So the general rule is 2 trade lines. That means 2 things that report to the credit bureaus for a minimum of 2 years. So if you're new to buying and you only have 1 credit card, which is like a lot of people,
right?
Why would I want 2 or 3? It's going to injure me because I got all this credit.
Right.
In actuality, it benefits you.
It helps because you're showing a track record amongst different credit products.
Yeah.
And presuming that you pay it all on time and you manage those properly, maybe through automation, right, pre-authorized payments, then it makes you look better.
Yeah, don't miss payments.
Yes.
It's important.
It's like what, over a third of what your credit score is based off of. Is not missing payments.
And one of the rules with credit, I mean, we're talking about a lot of things.
Yeah.
But one of the rules in credit is if you have a credit card and it's $1,000 limit, the rough rule is you don't want to exceed 75% of that amount.
I heard it was 40%.
I've heard it was 50%. I've heard it was. So
does it vary or?
It varies. From my experience,
maximum 75, I would think. I've seen 40.
From my experience, keep it below 75%.
For
or
sure.
make a phone call to the credit company, or the credit card company, and say, "Hey, can I get $2,000?" Yeah, sure. You've had it for a couple of years, no problem.
They're pretty liberal about it, unless they, of course, send you the mail, right? The snail mail that says, "Hey, you're approved. You're approved for more." You probably want to be more proactive than that. I love it. So credit obviously is huge, especially when you're far out. Now let's talk about horror stories of people that have been, they maybe have had decent credit, but they're at the finish line and they get blindsided of something that sets them back, either not being able to, afford the home, or maybe even almost losing a deposit. Like, what are some things that are worst case scenarios? Like, let's give people the dirt of the things you see on a regular basis that they can perhaps start to think about avoiding.
And we're going to talk about credit specifically?
Well, anything.
Okay. Let's talk about credit specifically.
Okay, stay on the topic, sure.
There's many times when I've had clients and they thought they had perfect credit. They didn't do this prep. We're talking about prep for 2020.
Yeah.
They didn't do their due diligence, and there was something that was trickling over that they didn't know existed, like a credit card. And they had paid it off. That was, 6 months ago, it was a zero balance, but the reality is some of the interest trickled over. And so they've got, $5 owing, $5.50, whatever it is, and their credit score drops and drops and drops, and they didn't even know.
Right.
And so, a couple of the horror stories were it dropped down past 600, even after we had checked it previously to get them prepared. So just do your due diligence, maybe even be on top of those credit websites. They're actually very good resources. So that's a horror story. You never want it to go below a number called 600.
Yeah.
That's like the death zone.
Right, or at least that means you're probably going to have to resort to alternative lending, private lending with much higher rates than what you see advertised on billboards.
Actually, I shouldn't say death zone. That's not a bad zone. It's much easier to qualify in some cases.
Right.
Because we go to these, alternative lenders, like you said, but it's the dangerous zone.
Sure. Yeah. So that's not ideal.
Not ideal.
Got it.
But you'll live.
Yeah, well, of course, that's what's important. At least in many of the cases. Let's look over to actually the kinds of people that apply. So you've got newcomers, you've got self-employed, lots of entrepreneurs that are storming onto the scene with, Shopify stores, Amazon FBA. You've got, of course, realtors, mortgage brokers, all kinds of self-employed individuals. What are some things that you usually see they have questions about usually? Or again, back to some stories where people are getting themselves into trouble because they haven't quite got their ducks in line.
Okay, let's talk about income.
I like money. Let's talk about income. Let's do it.
You like income, do you?
Yes.
Money. Who doesn't like money?
Right. Especially when you can get the amount of money that you want, right? But everyone's, of course, always shooting for more and more. I think it's after $75,000 that the marginal utility of income starts to flatline. So after $75K, generally speaking, you have what you need. Unless you want a house in Vancouver or Toronto and want to, hit the mountain slopes like you, or get on your bike. But anyways, that's another topic. But yeah, sorry, continue. So income.
So here you are, an entrepreneur like you are, like I am, like many.
Yes.
And you are new to the entrepreneurial world.
Okay.
So you had an existing employment job. Maybe you worked with Amazon. You had a contract with Shopify, and you're suddenly going into the contract world, which ultimately you can make a lot more money. But the reality is lenders out there, banks, credit unions, they look at you differently if you're self-employed. And so we've talked about this before, but if you don't have a track record of being self-employed, you stand a chance that you're not going to be able to use the income that might be more, because you're going to pay your own taxes, than what you did at that beautiful corporate job just recently.
Okay.
And so a couple factors to consider. If you haven't filed your taxes and you're brand new, it's going to be very difficult to use that income.
For sure.
And if you're smart, like your accountant will say, you're going to write off all your income. You're not going to pay any taxes.
Right, of course.
So there's a pro and a
Perks,
con
right?
to this.
Yeah, of course. What is that?
Well, the con is if you write it all off, then you might not be able to qualify for what you need.
Because they see you have less income declared?
Correct.
Oh, so-and-so only makes $30K, but really you make a lot more and you write it all off kind of thing?
Right,
Okay.
right. I think you've touched on stated income, right? A little bit?
Not on this interview, but on the YouTube channel perhaps.
Okay,
Yeah. Tell people about stated income.
Well, so stated income goes around where, let's say you make $100,000 and you have been self-employed for more than 2 years.
Yeah.
But you're tracking into 100 plus, and you write off your income to maybe 30 or 40.
Yeah.
Which is your accountant's going to say to do.
Sure.
Say don't pay the money to the government. Let's save it. We can actually state your income at a higher amount than what you're claiming. Let's say you're a consultant and you have minimal expenses. It's not like you're a trucking company where you have a lot of expenses and employees.
Right.
We could potentially state it up to maybe 70 or 80,000, and then the onus is on us to prove to the lender that indeed you make that much. It's a different style of lending. The majority of lenders do not do stated income programs, but there's a handful that do, and so there's a way that we can qualify you based on stated income. But consistency is still key.
And tenure, I'm guessing.
Tenure, yes.
Right? How long you do it, and then don't throw away your NOAs or documents that because when you actually are trying to prove all these things, you make the lender needs a handful of documents that probably come from your accountant, but some of them you might have to be tracking yourself.
Yep.
Yeah.
Yep. They might even ask for bank statements.
Right.
To show the flow of funds.
Yeah. So don't get locked out of your bank account, right?
Don't miss payments, and then they lock you out.
Yeah, there you go. And then your credit score gets messed up in full circle, right? Hey, let's wrap up. People are still always thinking about, look, like the online banking apps now, they're not as good as I think they could be, but they're getting a lot better, right? So people have all their history on there. They've got their profile set up. To add a mortgage with your bank, it seems like it's maybe takes less time, and the banks might be more trustworthy depending on how you look at things. Like, let's talk about the mortgage broker versus the bank. Are they ever friends? Are they foes? And why a mortgage broker over a bank, depending on you being a certain kind of person?
Oh, that's a good question.
It's the question, isn't it?
Well, for clients, I think it is.
Yeah, for sure.
Why would I use your services?
Yeah.
Well, Paul, you're good looking, and I like you. You got it.
There you go.
You're
Done.
in. But the reality is, you're just one individual, and you're essentially have access to lots of different lenders. And so when a client walks into a bank, they're fortunate enough to potentially have a relationship with that bank.
Yeah.
They're not going into the bank usually cold turkey. There's some connection.
Sure.
They will get what the bank has at that time. And as we know in this world, one bank will have a great option, the next bank won't. Everyone's floating around like this. And so it's very difficult to navigate best options in the market. And so the other thing is educational piece. Is a bank going to sit down with you and educate you?
Right.
And help you understand the credit, the income, the down payment components to an extent that a bank will. Maybe not.
Right.
We like to think no, because this is, we work for the client. We don't work
you mean
for
the bank to the extent of the mortgage broker? Well, yes. Yeah, just to correct. You said bank.
Oh.
So like bank versus bank?
Bank versus bank. Well, we are the bank. We're just different.
There you go.
No?
Just better looking.
So thank you. So I think it does come down to being able to have access to the market, 40 plus lenders, and the promos that pop around.
Yep. We get a lot of emails, don't we?
We get a lot of emails.
Rate changes, and it's crazy. Yeah.
Yep.
But there's a lot of it.
In fact, there's a rate change going on right now as we speak.
Tonight, how exciting.
We just spoke with a lender.
Yeah, 9 p.m. tonight.
Yep.
So we got to get that pre-approval in before then, apparently. So I'll be busy tonight.
Yeah. So I think ultimately, working with a broker, we work for you, the client. We have your best interest in mind. We don't keep bankers' hours. We want heavy education, and quite frankly, if the lender that we have you with is not going to fulfill our needs,
Right.
we take you to the next one. And so that's the benefit, I think. And we're looking for more long-term relationship.
Totally.
Yes, banks are too, but I'd like to think we're a little more non-biased.
Yeah, because end of the day, I mean, we work for the, like we're not getting paid per se by the actual consumer. We've got our different lender partners, and it's about, finding the best option for them and the best option for our lender partners. So it's a bit, I guess, different in that way, huh?
Yes.
Okay, cool. I like it. Couldn't have said it better myself. Any closing thoughts for the folks at home?
I would say save your money. Yeah, save your money. The down payment is crucial piece. We didn't talk about that.
We didn't.
Save your money and be smart about how you use it.
I love it. Perfect. Well, there you have it. Mckay Wood, Mortgage Pals, definitely most handsome and best dressed bow tie man around, top producer, and truly big mentor to me and many people on the team. So thank you so much for your time and insights today. And from your two favorite pals in the mortgage industry, Paul and Mckay, we're out.
Peace.
Peace.